Mark Konyn is CEO of RCM Asia Pac. In May, Mark warned about a correction in the Chinese market. He was spot on. Chinese stocks plunged in August, slumping into a bear market. Always good to have someone on the show who's been right on their predictions. Welcome to the show, by the way.
Thanks, Haslinda.
Okay, despite that correction, China's still up 75% year to date. Where to in 2010?
Well, I think investors are still fairly optimistic overall on China, on Chinese growth, on the commitment the government's got there, the authorities have in continuing to stimulate the economy. Industrial production globally is picking up. China obviously slumped as a result of the fall in global trade conditions, but has managed to shift gears in the economy and offset that largely through fixed asset investment through this year, 2009. Coming into 2010, I think investors will be a little bit cautious in the first quarter, maybe as much as the first half of the year, digesting a few IPOs, taking stock of the increased liquidity that we saw, particularly in the first half of this year through increased bank lending. So a little bit cautious, but overall we're positive for the full year.
How about corporate earnings? Will that be intact, solid still? Yeah,
corporate earnings have continued to improve. We've seen momentum in earnings upgrades continue at a pace this year, probably peaking now. We're probably at a 25-year high for the rate of the momentum behind the rate at which earnings have been upgraded. So for next year, we're looking at high single-digit earnings coming through. But the re-rating in the market, as applies to all emerging markets now, is pretty much played out.
You can hardly miss out the Chinese market along with India. What do you do now? Do you sit tight, wait for a correction, further correction before jumping in again? What should you do?
Well, our investors tend not to play China in the short term. That's a dangerous game. It's driven by large amounts of liquidity coming in and coming out of the market at short notice. I think the general perception is that the economy will still grow at the sort of 8–9% level, that liquidity conditions will still be strong in the mainland. Also, government policy will be conducive and supportive. And we've got the prospect, of course, of speculation on the currency, although our view is that the authorities won't widen the ban of the RMB against major currencies, certainly not against the US dollar, but that speculation will help drive more money coming into China. So our investors tend to take a slightly longer term view and will probably build positions during the first quarter if we're correct that the market will be a little bit cautious.
When you talk about taking positions, are you looking at what consumer plays? And you know, there's a division in terms of thoughts on where the property market is. Some are betting there'll be further gains, some are saying it will crash. In terms of these two sectors, what are your thoughts on it?
Well, certainly the authorities there are pinpointing policy to try and stamp out pockets of speculation that have occurred in certain segments within the property market, and that is likely to continue. So we would be cautious on certain plays that give you access to those segments in the property market that are going to be subject to that policy initiative. But overall, we expect to see monetary conditions still fairly strong. Monetary expansion in the mainland this year exceeded that in the United States, which is incredible given the amount of stimulus that we've seen in the US. So it will take time to rein that back in. So we'll probably see some sort of policy initiative going forward into the first half of the year, and widely expected for rates to be tightened during the first half of the year, perhaps towards the end of the second quarter. But overall, where would you position? Probably in companies that are going to benefit from increased capital expenditure, so companies that are providing services to certain industries. We're looking at the IT sector quite intensely. We're looking at certain areas within...
Any specifics?
We generally don't name individual companies.
I tried.
You can certainly have a go. But overall, probably IT companies, certain companies giving you exposure to domestic consumption. That's the big theme as China shifts gears, trying to stimulate domestic demand. There's a mad scramble to try and find and uncover those opportunities. They're fairly scarce at this stage because the market is still going through that structural reform where it's moving away from these big industrial groups and then focusing more as these IPOs come in and the smaller companies that give you access to these things.
Let me just jump in here. There'll be spillover effects in terms of for the rest of the region, the rest of Asia.
Absolutely.
Which particular markets will benefit the most?
Well, Taiwan probably is the one that's going to benefit most from this sort of political dividend, if you like, where the thawing in the relationship across the Straits is going to continue to improve the rating on the Taiwanese market. So we're still pretty positive overall on Greater China, Taiwan being a focus. Here in Hong Kong, I think the structural change in demand for residential property, with mainland investors really buying into this market, as we know over 20% is now explained by mainland investors.
Okay, Mark, we have to leave it there. Mark Konyn here on the show.